Good afternoon. Welcome to the World of Business with Garrett Henderson. I have a very special guest here today, Mr. Monroe Stadler himself. Monroe, I appreciate you being here.
Yeah, thanks for having me. This is my first podcast, so
Absolutely.
I'm excited.
Yeah.
Let's do this.
Cool. Yeah, so just to get into it a little bit, Monroe is Director of Acquisitions at Freeman Webb. Could you give us a brief description on Freeman Webb and what you all do?
Yeah, absolutely. So we're a multifamily owner-operator. We're completely vertically integrated, so we do our own property management, construction, buy our own deals. Our biggest footprint's in Middle Tennessee, but we're in 4 states currently, 18,000 units under ownership and management. And I'm the director of acquisitions, so I'm out there looking to buy deals, and that's actually how we met.
It is, yeah, and I will say, I mean, you really are one of the better acquisitions
I'm the
associates.
best, man.
No, you are. No, I really mean it. I think the way that I'm not just saying this because you're on here. I think the way that you conduct business, you show a very high level of professionalism, and I think that's what Freeman Webb really stands for, right? Because I was a broker, worked a lot of deals, closed a lot of deals, and I think Freeman Webb really does do it the right way.
Well, thank you, man. I appreciate that. I've got, really big shoes to fill with that firm. A lot of, really wonderful people, came before me to build that company up, and I'm really lucky to be there and really enjoy it.
It really is awesome because you're in your early 30s and now you're essentially overbuying and selling 18,000 units. So that comes with a lot of pressure, I imagine, right?
Yeah, it is a lot of pressure, but I've got some great mentors, and I've have 6.5 years of experience, and I've got great people to kind of give me guidance and lead me, and it's definitely a team effort. It's not just me, so we got a great team.
Right. So when we first met, you were an underwriter or an analyst, right? And then you moved up to director of acquisitions, and you really stepped into a management role. So I'm just curious, what has been the biggest adjustment for you in regards to now you're leading people, you're helping them grow as professionals, and ultimately you're leading them to success.
Right. I think you take on a lot more responsibility. You have to make a lot more decisions. I think that's a big adjustment. When you're first starting out in your career, it's a lot of, tell me how I can help. And then, as you kind of go up, it's more, let me tell you how you can help me achieve our goals as a firm. So
Okay.
I think,
Right.
It's just responsibility.
Yeah, absolutely. And just kind of, what I would like to do here is I kind of want to get a background on Monroe Stadler younger and kind of working our way up into Freeman Webb, right? Because to make a decision like that, to join such a prestigious firm right after graduating from Vanderbilt, it was right after Vanderbilt, correct?
Mm-hmm.
Yeah, I mean, that's
Actually kind of during Vanderbilt.
during Vanderbilt, right?
Yeah.
So for y'all don't know, Monroe here, he is a graduate of Vanderbilt, the business school, and I believe you're third generation, so your mother and your grandfather went there as well, right?
Yeah, my dad and my grandfather. Yeah.
That's awesome.
Yeah.
But yeah, let's just get into it. How are you? What was your upbringing like, and how did that lead you to make the decision? I want to be the best in real estate, and I want to know and to get where you are now.
Yeah, absolutely. So I grew up here in Nashville. My grandparents were mostly from Nashville as well. And my grandfather had a parking business, and growing up in the summers, I would work in a parking garage or a parking lot. Definitely started from the very bottom, cashier. One year I was actually a traffic controller, so I wasn't even
In the hot heat too, you told me.
Oh yes, I mean
$7.50 an hour, right?
Right.
Yeah.
I mean, I think my first wage was like $6.75 an hour. I'm in a parking garage in Nashville in the summer. It's 100 degrees, stale air, but you learn so much. You gain so much great perspective, interacting with the public in that role,
Mm-hmm.
and just such a huge appreciation for people who work in those positions, and you learn a lot. So I worked basically in every department in the company. So like I said, cashier, traffic controller. I worked in the legal department one year. I worked in the mail. Actually, my first job was in the mailroom.
Okay.
And I would shred paper for the company. So they'd have, this was back in like early 2000s, late 90s. So they had tons of paper to shred, and I would shred just paper for like 4 hours a day. And then my grandfather would pay me based on how many bags of shredded paper I had. So
That's awesome. So do you feel like, you mentioned your grandfather there and everything he's accomplished. Do you feel like he was a really good mentor for you in terms of business and showing you the ropes of how business is conducted? And
Yeah, absolutely. And that's really what gave me a passion for real estate, was wanting to follow in his footsteps in the real estate industry. So I went to SMU in Dallas for undergrad and got an economics degree and a history minor. And then I worked for a startup tech company for a couple years, which phenomenal experience I could talk about as well. But I wanted to make a change. I always felt like I needed to come home to real estate. That's kind of where I belonged. And so I thought a great way to
it was always in the back of your mind.
Exactly, yeah.
Yeah, okay.
And I thought a great way to transition from, one industry to another is through business school. So
yeah, for sure.
Yeah, so that's when I went back to business school and got a finance degree, but basically it's a minor in real estate. And then during my time there, in between your business school is 2 years, so in between your first and second year, you do an internship. And I worked at Freeman Webb, and they were like, "Hey, do you want to work during the school year part time?" And I was like, "Of course." And then so I was working part time during my second year. And
so who made the connection to get you? How did you get connected with Freeman Webb? If you don't mind me asking.
Yeah, absolutely. So being from Nashville, I knew a lot of people in the real estate industry, and just reached out to anyone who had a real estate shop in Nashville, whether it was office
hustling.
multifamily or retail or whatever. And I just reached out to a ton of people and feel very fortunate that I ended up at Freeman Webb, because with everything that's been going on, the past, I guess, 4 years with COVID, and multifamily's really been one of the better asset classes when you look at, office or hospitality or something like that.
Right. Yeah. So that's a great way to lead into my next question. So one of the biggest accomplishments I've seen you make since I've known you, we've known each other 3 years now. One of my better friends, and I saw you, acquire Gravity at 255 in Huntsville. 2008 product, over 300 units, $75+ million property. Now, tell me what went into that, because you're a young, aggressive, ambitious guy, and now you're at the center stage of the real estate world, acquiring such a major property. That's got to make you feel good and accomplished, right?
Yeah, that was a great property. It's in Huntsville, your hometown, which is a great area, right in Research Park. So it's around a lot of jobs and good retail. And Huntsville was a market that we first entered into in 2017 and have just continued to build up scale there. It's been a great market for us.
So correct me if I'm wrong, but in terms of ownership and management, I believe y'all are the largest owner/management company in Huntsville, right, for apartments and multifamily?
We are, I think we're number 2.
Okay.
I think Sealy's number 1, but I think we're number 2.
Sealy has built a lot.
They've built a lot.
They have built a lot.
And but we're up there. And that's pretty good for only entering the market.
Well, y'all are but y'all have a massive presence in Tennessee,
absolutely,
and Kentucky too as well. And I believe y'all recently sold off a property in St. Louis.
Mm-hmm.
Correct. And I know you mentioned 4 states. So which one would be the 4th, or would that be Missouri?
So Mississippi.
When did
Jackson, Mississippi.
Did y'all take over management, or y'all?
Right. So we bought a management company in 2020, which is another great way to grow your platform outside of acquiring deals or getting third-party management clients. You can acquire or merge rather with another property management company, and so we did that in 2020, I believe.
Okay.
And that deal just kind of came over with it. We're not.
So is that something that Freeman is that something strategic for Freeman Webb moving forward, is buying management companies? Because you and I looked at that deal in Louisville. It was about $70-80 million, and I remember you had asked me, can we buy the management platform? So is that something Freeman Webb is strategically trying to accomplish or moving forward?
Yeah, 100%. And I don't think a lot of other people are trying to do it, or at least I haven't heard it. So
No, when
I
he
think it's a good,
when he said it to me, I mean, I had never heard of that before until he told me, and learning about it. I mean, it seems like a very good strategy that nobody's doing right now. I think you're right.
Yeah, and it's a great way to get boots on the ground in a market, local market knowledge, because all real estate is local. That's what I love about real estate is, when you're talking about stocks, bonds in your world, there's a lot of the same item, and it's like, how much of this should I buy, how much of this should I buy, and that kind of depends on your goals and risks and things like that. But the thing I love about real estate is, like, there's only one property, it's tangible, and it's all differentiated. So exactly,
you can feel it. No,
exactly. So yeah, I think that's an interesting aspect of it.
Yeah, right. And everyone's gonna have to have somewhere to live too.
Right.
So
absolutely, we learned that. Yeah.
Well, and I think Freeman Webb is positioned perfectly right now because the Southeast is growing so much, and they have you taking over the acquisitions, and I think it's a perfect combination.
Well, thank you, man. I appreciate that.
Yeah, absolutely. So, yeah, I mean, I would like to hear your thoughts on the forecast for 2025 for the multifamily sector. If you got any opinions and thoughts you'd like to share on that.
Yeah, I mean, it's really seemed like, at least especially from an investment sales perspective, we've been in a bear market for over 2 years. So
Right.
if you go back to fall of 22, fall of 22, when the Fed started raising interest rates, transaction volume just kind of fell off a cliff.
I remember, just to add to it real quick, I remember in 2023, some brokerages I know of, I mean, the transaction volume was down 75% from 2022. So, I mean, that's a 75% drop in revenue from 2020. Yeah. I mean, it's crazy.
Yeah, it was a huge change because before that, I'm underwriting hundreds of deals all the time, and there's so much on the market, and it's like, what are we going to buy? And then all of a sudden it's just shut off. And then after that happened, a year or two later, this supply wave hit because when they started the construction projects, when interest rates were so low, a lot of developers started building because the math looks so much better when your debt is cheaper.
Right.
And our real estate, the real estate industry is completely driven by debt, transaction volume, development, all that.
Interest rates, yeah. Charges.
So then a bunch of properties got delivered. So, we're dealing with high interest rates. We're dealing with a lot of supply. I think 25 is where we see a lot, continued deliveries, a lot of supply coming online, but phenomenal absorption.
Job growth picks up, hopefully.
Job growth's picking up, hopefully, and occupancy is hanging in there. But right now the name of the game is kind of survive, wait, focus on occupancy, just keeping your deals healthy and in a defensive posture. And then I think there'll be a lot of great opportunities going into 2025. Because in 2026, we basically have a supply cliff right now, meaning we have a lot of deals under construction right now that will finish in 2025, and then 2026 very little. So we're going from, real estate's always in cycles.
So, yes, supply and demand, so the prices will go up because the supply will be limited.
Right, so we're going to go to a market, with an oversupply to an undersupply, and we'll just keep...
So let me ask you this. I mean, I don't think it's gone away unless something's changed. I mean, what about the commercial loans coming due? From my point of view, it seems like the banks are kicking the can down the road a little bit on that. I mean, what are your thoughts?
Oh, 100%. I mean, they're kicking the can down the road, and nobody's holding these lenders, feet to the fire, or the borrowers rather, feet to the fire. Everybody's just kind of trying to make it work, keep it moving forward.
Well, nobody wants to go down, right? Everybody wants to everybody wants to keep everybody up and playing the game.
Exactly.
That's the best way I can put it.
Yeah, I mean, banks don't want to own real estate. They don't want to manage real estate.
They're not management company. They're not Freeman Webb.
Right, exactly.
They're not Freeman Webb. Yeah.
Exactly. So they're just trying to, kick the can down the road and hope it improves. But there's not huge amounts of distress either. I mean, there's some, but
so you don't
but
see
not much.
you don't see any like a 2008 happening where
No, absolutely.
I know
not.
the commercial space is already down. What about single family homes? What do you think about the single family home market? Because
So my thoughts on the single family home market are we have a huge supply shortage of single family homes.
mm-hmm.
You know, if you read the real estate publications, they'll say we have millions of units of a housing shortage. You know, most of that's on the single family side. It's, I think, really difficult to zone, entitle, permit, and build right now with interest rates, construction costs, things like that. So we're in a situation where
right,
it's interesting. Multifamily is sort of, you know, down a little bit, and single family homes are, you know, skyrocketing in price. So the delta. So if you look at some online articles or run a calculator or whatever, the spread between the average rent of an apartment and a house is extremely high. It's like $1,200. So it's $1,200 cheaper per month to rent an apartment than have a mortgage. You know, pay the mortgage.
That's a nice advertisement you got there.
Right. Right.
Gravity, guys. Gravity.
But that's using today's
No,
interest rates.
I have seen those stats though.
Yeah, and most people living in a home currently, you know, have an interest rate that's much lower than what today's rates
let me
would
ask
be.
you this as well. You know, the economy hasn't been the greatest over the last 2 years. People are struggling. You got student debt, credit card debt, car debt. You know, a lot of damage was done in 2021. People overspending. I mean, do you get, you know, if the economy doesn't pick up, job growth doesn't happen. I mean, do we get to a point where people throw in the keys on single family homes? Do you think it's a tough question?
They're so valuable. I mean, it really would depend market to market. But like, since we're in Nashville, I'm from Nashville, the homes are so valuable. I think the banks would be fine with it. It's not like they'd be stuck holding the bag or anything.
They'd be willing to take a hit and resell it because there's a good amount of buyers in Nashville. Is that what you're saying?
Right. Yeah. The home market's so hot. I mean, my wife and I have been looking for a house for 2 years, and
every time we talk, hey, how's the home search going?
I know.
Hasn't moved.
It's really tough. Ask people who are trying to move to Nashville, buy a house in Nashville. It's really tough. I mean,
that's awesome.
Yeah. But if you want to live downtown, now's the time. I mean, concessions are very high.
I remember you were trying
Nashville.
to convince me to get a high rise.
You should.
High rise to rent. Get some of those concessions going.
Yeah, we could probably get you 3 months free. You can live downtown.
Pay $3,000 a month.
Well, maybe.
Hey man, for the view of Nashville, it's an amazing city. I mean, the skyline's great. It's a newer city. I really like Nashville, and I think Nashville's going to continue to grow, and I think Nashville's going to continue to do well, like just like most of the Southeast.
I think so too. I mean, I think we've got a great business climate. We've got a great family-friendly atmosphere here in Nashville. Tons of live entertainment. And I think that's evident looking at how many businesses are moving here, and 98 people a day is what the statistics say, and it's
I was doing the math on that. I believe it was about 35 to 40,000 people. Let's see. Yeah, it was about 35 to 40,000 people, maybe a little bit more. It's a lot of people. That's a lot of units. And I think we did the math. I think that was per the average unit, the amount of units in each apartment complex. Sounded like they were going to have to build about 144 a year.
Yeah, I mean, right now there's about 15,000, units under construction, and about that same amount coming next year, and then it falls off a lot, maybe 6,500. And just to put that into perspective, I think the average of the last 5 years is like 7,000, 7,500. Don't quote me on that, but it's about double.
Okay. Yeah, that's interesting. So, I mean, moving forward, with like Freeman Webb, what is y'all strategy right now? Going for the 80s product, 90s product? Where do y'all see the fruit at?
Yeah, I mean, it's always changing, and the great thing about Freeman Webb is we can go up and down the risk reward spectrum. So if it makes more sense to buy brand new product or older product and invest in it, we can do that or anything in between. Right now there's not a lot on the market, like we were talking about earlier. Transaction volume's down a lot, But I think the value right now in the market is this new construction stuff below replacement costs. And what I mean by that is you can buy recently delivered constructed apartment buildings in Nashville for less than what it would cost to build it today.
Are those properties actually transacting right now like that?
Yeah. I mean,
So there's
not a lot, but there are some.
So there's been apartment complexes trading below replacement costs.
Absolutely.
I did not know that. That's interesting.
Absolutely, and why that's so important is
because you and I have looked at those deals together. Some of these A-class apartment units. So that means the market's moved a little bit in the last year or so, right?
Yeah, and it's I think it could, and I think pricing's like slightly increasing now, and I think that kind of continues as people anticipate, better prospects, a better environment ahead. But why that's so important is because you've got your competition beat, because if they build, their development's more expensive than yours, they're going to have to charge, they're going to have to make more revenue basically
right.
to get the same yield. So in the real estate industry, buying below replacement costs feels like really, really good.
So another question I had that came to mind was, even one of the deals we looked at, right? You have all these A-class apartment buildings going up in downtown Nashville. Where do they find the parking at for some of these apartments?
It's interesting.
Because on the deal we looked at, that was an issue. There wasn't enough parking for the apartment complex.
Right, and you see that a lot, and that is due to changing parking requirements in Nashville. And the idea is, we're moving more towards a demographic that, can take Uber, wants to ride bikes, carpool, things like that. In our experience, we really haven't seen that play out, but it obviously depends on the walkability of your location and things like that. And Nashville just passed a huge multi-billion-dollar transit plan. But it also helps it helps development because, you can do more developments if you can build less parking. So I think it's kind of a trade-off of, having an apartment complex with, a certain amount of units that's, going to increase supply, hopefully lower the cost of living for those renters, but then they need a place to park.
Would they not be able to build it parking underground? Is that not an option?
It's really just not feasible in Nashville in a lot of cases because, and they do it. It's just extremely expensive. I mean, we're on top of limestone here, and it's very expensive to dig down, but they still do it. It's just tough. It's just expensive.
Well, I know in Huntsville, one of the problems downtown that they're having is the tunnels under the ground. So you can't. They're only able to build up so high.
Because there's tunnels underneath Huntsville?
Yeah, that's what I've heard from multiple developers.
And these aren't sinkholes; they're tunnels.
There's some yeah, no, there's some type of tunnels. I've heard it from multiple developers that you can only build so high in certain parts of downtown Huntsville, specifically because of the way that the ground is something to do with like water erosion, making tunnels or something like that. I mean, don't quote me on that, but that's what I've heard. That's one reason they haven't built more height.
Yeah, I mean, the other interesting thing about Huntsville is the development is so suburban. Whereas
spread out.
It's very spread out, whereas Nashville is so concentrated on the downtown core. I mean, we've got Bridgestone, Nissan, where the hockey team plays, where the football team plays. We have so much just right downtown. Broadway's the big...
Love Broadway.
Yeah, the big entertainment scene, so...
I just got to go ahead and say this on the podcast. I actually... this is a joke, but I flew Michael Jordan out to Nashville for a meeting I had in Monroe, and he stood me up. But I got pictures of Michael Jordan if you guys want to see them.
Yeah, and it's funny. I saw Nate Diaz, the UFC fighter, at that same bar a couple weeks.
Yeah, it's crazy, man. Nashville's a happening place. Like it's really cool. So yeah.
Yeah.
So, to close the podcast out, the last subject I'd like to cover is the Monroe Carell Jr. Children's Hospital at Vanderbilt, which is, so it's named after your grandfather, and I would like you just to explain to the viewers and honor his memory of, the things he contributed to the hospital and the good work they're doing there.
Yeah, I mean it's extremely important work because you're saving lives and it's children, and Nashville really they didn't really have a hospital for children in Nashville when it was built, and he had several hospital stays as a young child. He was sick in and out of the hospital, and so he that really stuck with him, and he wanted to have a hospital and for children in Nashville, and he was very passionate about it, and he would go there all the time, and yeah, it's a wonderful thing. I'm on the board there. They're doing amazing work, and I'm just really happy to be a part of it, and just happy to support it in any way I can.
Yeah, no, that's awesome. Continuing the legacy and everything he's built and what you're adding on to it and the good you're doing in the world. I mean, it's honorable. It's great.
Thanks, man.
Yeah, absolutely. Well, man, I appreciate the friendship. Appreciate you coming on, talking to us, giving us some really, really great content. I mean, your story's amazing. Your accomplishments are amazing. You're young. I mean, the sky's the limit for you.
Well, thanks, bud. I really believe in you too, and I've always tried to support you, and so I believe in you too.
I appreciate it. Well, thank you, Mr. Stadler.
All right, bud.
It's great.